Buckle up, crypto kids. Bitcoin took a nosedive. The charts look like a sad roller coaster, and everyone's freaking out. But hey, chill. We're here to break it down. Remember those crazy highs Bitcoin hit? Yeah, what goes up must come down. Gravity, bro. Why the sudden drop? Is this the end of crypto as we know it? Spoiler alert, probably not. Stick around because things are about to get interesting. Let's talk emotions, baby. Because in the cryptoverse, your feelings are just as important as your portfolio. See, the crypto fear and greed index is like the mood ring of the crypto world. Right now, it's flashing extreme fear. The kind of fear that makes you want to sell everything and live off the grid. But hold your horses. This fear, my friends, could actually be a good thing. Remember that whole buy low, sell high mantra? Well, when everyone else is running for the hills, that's your cue to potentially snag some sweet deals. So buckle up, buttercup, because we're about to explore the wild world of market sentiment and what's really driving this crypto crash. Alright, let's talk about the elephant in the room, the crypto fear and greed index. Think of it like a giant mood ring for the entire crypto market. Green means everyone's feeling greedy. Buy, buy, buy. Red means fear is in the air. Sell, sell, sell. And right now, my friends, that ring is glowing redder than a sunburn after a day at the beach. We're talking deep, dark, hide your Bitcoin under the mattress kind of fear. Why? Because this index just plummeted to a level we haven't seen since Bitcoin was down in the dumps back in early 2023. But here's the thing about fear, it's contagious. 1 minute everyone's feeling bullish, throwing money at anything with blockchain in the name, and the next minute they're jumping ship faster than you can say rug pull. So yeah, the crypto fear and greed index is a big deal. The crypto fear and greed index isn't just some arbitrary number pulled out of thin air. It actually takes into account a bunch of different factors like market volatility, trading volume, social media sentiment, basically anything that might give a clue about how people are feeling about crypto at any given moment. And right now that number sits at a dismal 29. Yep, 29. That's lower than your chances of winning the lottery and about as appealing as a cold slice of pizza left out overnight. Now you might be thinking, dude, 29 sounds bad, like really bad, and you wouldn't be wrong. Historically speaking, when the index dips this low, it means people are seriously spooked. But extreme fear can also present some seriously juicy opportunities for savvy investors. The Bitcoin bloodbath. Who's selling and why? So we know the market's freaking out, but the million-dollar question is why? Governments are cashing out their Bitcoin. Germany's selling billions worth of Bitcoin. The US is offloading its Bitcoin stash too. It's a perfect storm of selling pressure. Uncle Sam needs a new pair of sneakers. Government sell-offs. Governments have been hitting the sell button harder than a teenager at a Black Friday sale. Uncle Sam and his buddies have been quietly offloading their Bitcoin stash. Germany's been holding on to a mountain of Bitcoin worth billions, and the US government's been selling too. When they start selling, people notice and get scared. Mt. Gox, the gift that keeps on giving Bitcoin away. Remember Mt. Gox? That infamous crypto exchange that went kaput and took everyone's Bitcoin with it? They're back, baby. And this time, they're giving it back. More Bitcoin is about to hit the market. You'd think people getting their stolen Bitcoin back would be good, right? But in the crypto world, things are never that simple. When a ton of Bitcoin suddenly becomes available, it can mess with the supply and demand balance. Prices tend to go down. So, thanks for the thought, Mt. Gox, but your gift might just push the market over the edge. Fear is contagious. The domino effect of panic selling, government selling, Mt. Gox making it rain Bitcoin, even seasoned crypto veterans sweat. Fear is ridiculously contagious. 1 minute buying dips, next minute running for the exits. Panic selling plummets prices. It's a vicious cycle, fueled by pure fear. The real culprit is panic. The cure? Rationality, and maybe tequila. Alright, so we've got governments dumping Bitcoin, Mt. Gox unleashing a torrent of coins. It's enough to make anyone want to crawl under a rock. But before you go full on doomsday prepper, let's hear what the experts have to say. Rachel Lynn, co-founder of Sin Futures, says this sell-off isn't over. She reckons there's still a lot of selling pressure waiting. Governments bought Bitcoin late, and now they're selling late. And guess who gets stuck holding the bag? Yep, the little guy. Buckle up, Buttercup. It's gonna be a bumpy ride. Next up, we've got Marcus Thielen, the head of research at 10x Research, a guy who knows more about market cycles than your grandma knows about knitting. And let's just say, Thielen's not feeling too optimistic about Bitcoin's future. In fact, he recently slashed his price target for Bitcoin to a cool $50,000. Remember that whole Bitcoin to the moon thing? Thielen chuckled during a recent webinar. Thielen's concerns stem from the fact that Bitcoin's been struggling to break through key resistance levels. Plus, with all this government selling and Mt. Gox drama, he reckons it's gonna be tough for Bitcoin to regain its mojo anytime soon. When experts disagree, time to consult your magic 8-ball. So, we've got Rachel Lynn saying the sell-off ain't over yet, and Marcus Thielen predicting a dip to $50,000. Who's right? Honestly, your guess is as good as ours. That's the thing about experts, they're like weather forecasters. They can give you educated guesses, but at the end of the day, nobody knows for sure what the market's gonna do. So, what's a crypto investor to do? Well, if you're the type who likes to live dangerously, you could always just YOLO it and buy the dip. Or you could take a more measured approach, do your own research, and make an informed decision. Alright, let's say all that government selling and Mt. Gox drama turns out to be a big ol' nothing burger. The dust settles, the crypto fear and greed index crawls out of the gutter, and suddenly everyone remembers why they loved Bitcoin in the first place. Maybe a big-time institutional investor jumps in with a massive buy order, or maybe some groundbreaking news about Bitcoin adoption hits the headlines. Whatever the catalyst, the bulls are back in town, baby. Prices start climbing, slowly at first, then faster and faster. $60,000 Bitcoin, been there, done that. 70,000, yawn, old news. Suddenly everyone's talking about $100,000 Bitcoin again, and the FOMO is real. Those who bought the dip are popping champagne and booking flights to their private islands. Okay, let's say the worst of the selling pressure is behind us, but those Bitcoin bulls are still on vacation, sipping margaritas on a beach somewhere. What happens then? Well, we enter the wonderful world of sideways trading. Imagine Bitcoin stuck in a price channel bouncing between, say, $50,000 and $60,000. It's not exactly exciting, but hey, at least it's not another heart-stopping crash, right? This scenario is all about consolidation, the markets taking a breather, digesting all the recent chaos, and trying to figure out its next move. Day traders might get frustrated, but long-term holders are just chilling, accumulating more Bitcoin while the price is relatively stable. Scenario 3. The crypto-apocalypse, Bitcoin, takes a one-way trip to zero. Okay, time for the scenario nobody wants to talk about. The crypto-apocalypse, the big one, the ultimate rug pull. Imagine a world where Bitcoin loses all its value. Poof, gone, zero, zilch, nada. Your hard-earned Bitcoin is now worth about as much as a used napkin. Maybe it's a catastrophic hack that destroys confidence in the entire cryptocurrency ecosystem. Or maybe it's governments cracking down on Bitcoin with the fury of 1,000 suns, banning it outright and throwing anyone who dares to utter the word blockchain in jail. Whatever the cause, the result is the same. Bitcoin is dead, kaput, finito. The dream is over. People are panic selling their Bitcoin for whatever they can get. A loaf of bread, a gallon of gas, a hug. The Fed crypto's uninvited party guest. Remember the Federal Reserve? Those guys in suits who control the money printer? Yeah, well, they're like that uninvited guest who shows up to your crypto party, eats all the snacks, and then crashes on your couch for a week. See, even though crypto likes to pretend it's this whole separate universe, immune to the whims of traditional finance, the Fed's decisions still have a way of rocking the crypto boat. When the Fed speaks, the markets listen, and that includes the crypto markets. Remember those risk-on days when everyone was throwing money at anything remotely related to crypto? Yeah, those were fun times. But when the Fed starts talking about raising interest rates or, God forbid, their bond buying program, it's like someone just poured ice water on the party. Suddenly, crypto investors start feeling a little less adventurous. Rate cut rapture or taper tantrum. The crypto crystal ball is hazy. What's the Fed's next move? Heroes slashing rates, sending Bitcoin to the moon, or villains causing a taper tantrum? Your guess is as good as ours. The Fed's always changing their mind. One day good times, next day inflation worries. Dior, don't invest more than you can lose, and buckle up. Section 1. Stay informed, stay chill, and keep your diamond hands strong. So, there you have it, crypto crew. We've explored the depths of the Bitcoin bloodbath, from the government sell-offs to the Mt. Gox mayhem, and the crypto fear and greed indexes swan dive into the abyss. Is this the bottom? Who knows? Will Bitcoin rise from the ashes like a phoenix in a Lambo? Time will tell. But remember, crypto is a wild ride, full of twists, turns, and the occasional loop-de-loop. The key is to stay informed, don't panic, and never invest more than you can afford to lose. Because let's be real, sometimes those paper hands get itchy. And hey, if you're feeling brave, maybe even consider this dip a buying opportunity. After all, fortune favors the bold and those who understand the importance of diversification. Until next time, stay frosty, crypto fam.